welcome you, everyone, on the webinar today to Navigating Payday Loans and Ponds. My name is Nathan Acri, and I'm a credit counselor here at Family Life Credit Services. And today, for our October webinar, we're going to talk a little bit about payday loans, pawn shops, those kind of alternate financing, and just kind of give some general ideas on what they are and how to deal with them, and some possible alternatives. So let's just start off here with a word of prayer, and then we'll jump right in. So God, we just thank you for this day, Lord. Thank you for an opportunity to talk through some of these financial issues each month through the internet, Lord. Thank you for that possibility. And I pray that you would just bless this time, Lord. I pray that we would have something that we can take away and apply to our own situation from what we learned today, Lord. Just bless this time. We invite you here today. In your name we pray. Amen. Well, let's jump right in here. If I can get to my next slide. There we go. So first we're going to talk about payday loans. So payday loans are basically an emergency short-term loan. You may be seen in your city, in your town, you've maybe seen the payday loan stores, little buildings with, they would probably just say payday loans on the sign, but they basically what they do is you can get a loan without having your credit checked or anything, getting approved that way, basically to be paid back your next payday out of that next paycheck. So you know, they're designed to be used in an emergency where you needed the money a few days before your next paycheck, especially for those that maybe don't have a credit card. They can put that emergency payment on or whatever. So the full amount of the loan is due the next pay period. So, you know, if I get paid on Friday this week, but I needed $500 today for whatever, for rent or a car payment that's due or something along those lines, I would take out, I could go to a payday loan store, take out a $500 loan, and if I get paid on Friday, that $500 is due on Friday, the day I get paid, along with usually like maybe a $50 fee along with that $500 loan. So on Friday, I would owe the payday loan company $550. It's usually not something that's set up to be paid off over a few months or even years, but it just goes until that next payday. And if you would need a proof of employment required to basically get approved for the loan. So they need to see that, yes, you get paid this, you know, every other Friday or on these days each month, and that's what they would then take the check and cash it that day that your paycheck comes through the bank, or you can go in and pay the loan back in person, which is usually what they prefer, is to have you come in and pay back the loan in person right away on payday. So fees and interest for payday loans, you know, might sound like a great idea to go get a payday loan. You know, you get your paycheck before you actually get your paycheck, but know that the fees and the interest rates on these loans are extremely high, into the 200 percentile, 260% APR. Basically, if you took out a $50 or $500 loan and then paid it back even a few days later with a $50 fee added onto it on payday, essentially you're paying a 260% annual percentage rate, which in comparison to a credit card, even the worst credit card would have only a 30% APR. Well, I say only, but you know, that's still a high interest rate. But a $50 fee to basically borrow $500, you know, usually not the best idea. in the world, obviously, as we can see. Another thing with payday loans, if you cannot pay back the $500, many times, many payday loan companies will let you do an extension until the next payday. So you would give them the $50 fee this payday, but not the $500 that you owe. And then 2 weeks from now, your next payday, you would owe the $550 again, the loan plus the fee. So you can see how those fees and the interest would build up very quickly just by extending it. So if you ever are considering taking out a payday loan, make sure you have a plan in place to be able to pay it back right away on that first payday and not put yourself in a position where you would need to extend the loan from payday to payday, because that's where they're really going to start collecting the fees. To pay a $50 fee for a $500 loan in an emergency situation, it could be a lot worse, I guess. But to have to do it payday after payday and keep extending it, that's where that interest, basically the fee that you're paying, is going to add up pretty quickly, and you're going to pay back much more than what the original loan amount was, and that's where the payday loan companies will make their most money. It's such a dangerous form of borrowing that it is actually illegal in 13 states. So maybe you're here today and you've never seen one of these places, but it's possible that it might be illegal in your state. And I know it's becoming more and more of a fight against payday loan companies to make them outlawed, just because it is such a tough debt to get out of once you get in a cycle of paying back the fee each paycheck. It is the most common form of predatory lending, really predatory on those that are in an emergency, and gives them a way to charge pretty high fees for those that are in pretty desperate situations. In 2008, the largest payday loan company, their income, just from the fees, and I won't say the name of the company, but in 2008 they took in $676 million just in fees. So you can see why that business is so profitable for someone, because it's so easy to get in the cycle where you just end up paying the fee each payday and the actual loan amount never goes down. But every 2 weeks you have a $50 fee or $30 fee or whatever it is. So a very tough loan to get out of unless you have a good plan to pay it back right away within your budget, within that next paycheck. Lenders' largest cost, payday loan lenders' largest cost, is besides paying their employees, even more than paying their employees, is trying to collect on those payday loans that can't people aren't repaying, maybe not paying even the fee to keep it going. 20% of payday loans end up in default, and that's where they lose out on the most money there. So they bring in $676 million in income for one company, but they end up losing a lot of money too, because people just can't pay them back, and they end up going to collection agencies, which isn't a good thing for the borrower or the lender, obviously. More on payday loans. If you can't pay it off, let's say you take out a payday loan today, it's due Friday when you get paid, or next Friday, or whatever the case is. If you can't pay it off, first thing I would do is call or go into the payday loan store and try to work out a payment plan. It's possible. Each lender is going to be fairly independent with how they do business. So it's possible that you may be able to work out a payment plan with the lender to maybe pay it back over 3 months or 6 months to avoid having to suffer all the as high of fees as might be possible. So you maybe even bring in your budget, show them how you can afford to repay it in X number of paychecks or X number of months, but that it's just not possible to pay it off all all in one shot. So try to work out a payment plan, or try to pay more than the renewal fee. So if you borrow $500 today, it's due Friday on payday. Maybe you can't pay the full $550 back, but maybe you can pay $250 back. And so you still owe them $300. Well, now the renewal fee might be a little bit less for your next payday, and just try to chip away at that balance. You're still going to have to pay a fee each pay period if you're not paying it off in full, but that'll help chip away and might lower the renewal fee as you go. So try not to be in a position ever where you're just paying the renewal fee. Try to put something towards that principal balance each payday if possible, if you can't pay the whole thing in full. If you need to go into default because you can't even afford to make the renewal fee payment, that's, like I said, 20% of these payday loans end up in default. It's very common, just a tough cycle to get out of. So if you do end up in default, it might be something where you need to go as far as even closing your checking account at your bank so that they can't run the check through on payday. Because if you don't go back and to pay it on payday, they will have a blank check from you or a check for that amount that they can take to the bank and try to cash. And so to prevent them from doing that, if your worst case scenario would get to the point where you have to go as far as closing out your bank account to make sure that they can't take that payment out if you can't afford it. So in that case, they would try to cash it. Eventually, they would send it to collections, where you would basically have a couple choices. Try to make payments to that collection agency to chip away at that debt, or even if you saved up even half of what you owe and tried to settle with the collection agency. Sometimes that's possible. If you owe $600–700 to the collection agency, there's a chance that they would maybe take $300 or $400 and settle with you. Otherwise, it's probably even a better chance that they'll make you pay it in full if it's that amount. So, it might be a little bit even easier to work with a collection agency, but they, at the same time, collection agencies are more likely to call you and harass you and send you mail and be a little bit on the annoying side. So best thing you can do is do everything you can to pay it off as fast as possible, or even settle with the collection agency at that point. And it might even be possible to settle with the payday loan company themselves before it even gets into default. And so, again, this is going to depend on the lender. But if you owe $550 and you're just paying the renewal fee every month, if you can even come up with $200 or $250, it might be worth it to offer that to them to see if they would settle with you for that amount, especially if they, if it's been a few months where you're just renewing the loan each month. They may settle with you knowing that they've already gotten, the loan plus some back just in the fees that they've received during that time where you're just renewing the loan. So it might be possible to work out a settlement with the lender themselves. The only thing is, with anytime you settle, you need to have that money in hand, able to settle that day to do it. So, but that's a possibility. Then the other, I guess, form of predatory lending, or just the other thing we're going to talk about today is just pawn shops. We're just talking about pawn shops, which is basically, if you've ever seen a pawn shop before, they basically give you a loan using some form of property that you have as collateral, whether it's electronics or tools or furniture, those kinds of things, that needs to be paid back in a certain amount of time, weeks or months, before they would go and sell that collateral. So they're repaid in a short period of time, and you're going to pay back the loan plus the interest or fees, which again, much like payday loans, can be a very high rate, making it a little bit tougher to get out of those cycles. you can't pay back the loan, if you can't do it in the time period that you agreed upon, basically that collateral, those electronics or tools, furniture would go up for sale at that time at the pawn shop. So pawn shops will also purchase items from you, but the purchase price is usually well under value. For example, if you had a TV that you paid $1,000 for, 6 months ago, and needed some cash, decided to sell it to a pawn shop, they're taking into account how much they could make on a used TV, a 6-month-old TV, and you might only get $100 for that TV for that purchase, and they would try to sell it for maybe $200. So you might not get a whole lot by selling it to the pawn shop. What I would do, we'll get into alternatives here to both of these things here in a second, I guess, but bottom line is anytime you sell, even the loans, many times they're the money that you get for them is much less than the value of the item that you're pawning or selling. So, some alternatives would be, if you need the money today in the payday loan case, or even the pawn case where you just need a little bit of money to pay a bill before payday or whatever the emergency situation is, first place I would go to is to your local bank. And I would, go to your local bank or credit union as opposed to some of the more national banks. Those financial institutions might have some leeway and some leniency on who they can give loans to and who gets approved. And if you can get a bank loan for $500 as opposed to a payday loan for $500, the interest is going to be much less. They might be able to stretch out the payments for 6 months or a year, making it a little bit easier to pay back more efficiently even. So the first place I would go is to check with your bank, and they may be able to use some collateral too, even if you have an old car or a recreational vehicle of some kind, or who knows what they could potentially use as collateral. So there might be more alternatives at the bank than you would think, and any of those alternatives are going to be better than going the payday loan direction. If you have a credit card or can apply for a credit card, but if you have one, even taking out a cash advance is going to hold less of a fee than it would for a payday loan or for a pawn shop. Even taking out a cash advance, that would make more sense than doing either of those options. Or if you can just use it, pay your bills with the money you have, and maybe replace that income by purchasing your groceries and gas, those kinds of things on the credit card for that month, that would make sense as well. The only thing is, again, you need to look farther ahead than the current month. If it's going to be something where it's going to be every month where you need to purchase all your groceries and gas on a credit card just to make ends meet and pay all the bills with your paychecks, that's probably not a good decision either. And at that point, you would want to look at your budget and all of your finances and kind of reevaluate, is there something I need to do more long-term? Do I need to bring in more income? Do I need to cut out some of my expenses? What do I need to do to maintain that even, like a good budget farther than just this month or this week? So be careful when using credit cards as well. But again, the fees on the credit card are going to be a lot less than the payday loans and pawns. Still not a great idea to have to rely on credit cards, but it would be better than going the payday loan or pawn direction. And again, only do it that way if it's a 1-month emergency situation. If it's going to be longer than that, if it's going to be every month, then it's time to sit down with your spouse and kind of go through your total financial situation, or sit down with a credit counselor and decide what the solutions might be more long-term. if it's not just a monthly or not just a one-time emergency. So other alternatives would be to sell those assets. We talked about pawning assets, but what in my opinion, if you can afford to live without the asset that you're pawning, more than likely, if it's an emergency, you can afford to live without it completely, and you can go ahead and sell it. If you're familiar with Craigslist or eBay, those are easy ways to sell electronics or furniture or tools, those kinds of things online. Otherwise, use the local newspaper if it's something larger than that, something that would be difficult to sell online. But don't be afraid to take the drastic step to actually go and sell those assets rather than even trying to pawn them to get that cash quickly. At that point, it's all about evaluating what's really important to you. If it's something where you need $500 and you have a TV that you could sell for $5, and maybe you have another older, smaller TV that you could use to get by during that time, it might be worth it to sell the $500 TV and just live without it for a time being. And then, worst case scenario again, even before you would go to a payday loan shop or a pawn shop, I would never recommend going to family or friends for help just because of the strain that can put on relationships. But at the same time, if you have no other options, I would maybe even go this route before going to the payday loans. But again, this would be a last resort. If you have nothing to sell, if you have no credit cards, if you can't get approved for a bank loan, then I would go to family or friends. But again, it's a last resort. It can harm even the closest father-son or brother-sister, parent-child relationship or even friendship. If you owe somebody money close to you, it can, without even knowing it, that can have an impact on your relationship. So just be careful when you're dealing with borrowing from family or friends as well. But at the same time, it's probably better than you turning to the payday loan pawn shop type lender to get through that, whatever you're struggling through financially. Okay. Preventing the situation, then use a realistic working budget. When you're putting together your budget on a monthly basis or for the year, make sure the most important thing I believe is with your flexible expenses. With your flexible expenses, things like groceries, gas, entertainment, clothing, eating out, those types of things that aren't necessarily a monthly bill, really try to split that money off right when you get paid. Have a plan to spend $200 a month on groceries, and then every payday, take $100 from that paycheck and put it in a separate account or take it out in cash, but take that money away from your main checking account right away so that you can stay on budget that way. And you can do that with any of those flexible expenses, anything that's not a bill. Make sure you're preparing for emergencies. Put money in savings on a consistent basis. Build that habit. Even if it's even take it to the step of putting it in a savings account at a different bank than where your normal checking and savings accounts are. Something that makes it difficult to get at, a little bit, take some extra steps to get that money out of that account to be prepared for emergencies so that that account can build up. Take advantage of any income opportunities, extra income opportunities, whether it's promotions or second jobs or medical research studies. Take advantage of those income opportunities to build that emergency fund, so you don't have to find yourself in a position where you need a few $100s extra a month to deal with an emergency. And then decipher between your wants and needs. My wife and I lived without cable or internet for about 3 years when we first got married, just because we had some debt that we needed to get paid off. It was definitely a want. Those kinds of things were not a need for us. We didn't need it for work or anything like that. It was all entertainment. And so, we survived. And you can too. When you, it can be a kind of a rush actually too to get rid of some of those wants, those things that we've maybe lived with for so long that are just kind of extra things, like your cable TV or your internet or your home phone or even cell phones or any of those conveniences. If you're at a point where you're having emergencies every month, time to determine what's a want and what's a need, and maybe cut out the wants to get yourself caught up for a few months, and be willing to change your lifestyle. No matter what the neighbor's doing or your family members are doing, brothers and sisters, parents, aunts and uncles, friends, however they live doesn't have to be the way that you live. And take pride in your change of lifestyle and the sacrifices that you can make for your family to be prepared for any financial boulders that end up in your way. Take pride in the sacrifices you make to be successful financially. If you have questions or have a specific situation that you are needing some guidance or assistance with, feel free to send me an email or call me anytime, whether it's with Payday Loans or Ponds or anything else financially. I would be more than happy to help you out as much as I can, or send you on to an expert in a particular area with whatever you're dealing with. But feel free to email us or call us anytime, and we'll be more than happy to help you out. So with that, that ends our webinar for today. I'd like to thank you all for participating. I hope you all got something that you can take away and apply to your situation. And please do call or email if you have specific needs or questions that need to be answered. Thanks, and have a good day.